Okay, so let's have a recap of the watch list for today. And we were looking at, in the main, gold in the US 30. And I forgot actually to do anything with the oil. We had the oil data out at 10:30 and I wasn't paying attention. So oil is usually something we would look at. Silver we were looking at um, with a bearish bias, and there hasn't been really much outcome in silver other than it's just stayed um, in the lows of the day, really. Um, so let's look at gold. Gold is something that's running currently, and we talked about the prospects of a move higher. Now it's been a real drag, but nevertheless it's panned out pretty well. I.e., there's been no loss um, on the prospect of a trade setup, right? So um, gold, for those that didn't review the analysis earlier on, I'll just do a quick recap of what it was. So if we go into replay mode, and we started looking at it, I was a bit late today in doing my analysis, just caught up with various tasks. Nonetheless, at the time of producing the analysis, this is roughly what the market looked like. And it was actually offering, I don't recall it being a 3-star setup, but maybe it was. The risk, but what I do is I work from a top down approach, and then I move right into the here and now. So, on a macro technical approach, what I use to help me just to speed things up, otherwise, I'd be here forever writing lines all over the charts and having to go through various time frames. It would be, very time consuming, which what it once was for me. But since having collaborated with my colleague on this indicator, it speeds things up very nicely. So this indicator, the Trend Predator Pro, will analyze the monthly chart, the weekly, the daily, the sessions. So each session is roughly 8 hours, depending on your broker or what asset you're looking at. And then you can split that session into two, so a 4 hour chart. And what we're looking at is those time frames, and we're looking for a confluence, continuity of either bullish or bearish bias. And we arrive at either a bullish or bearish bias for each time frame based upon what the price is doing compared to previous days levels, or previous period levels. So if we're looking at the month, we're looking at last month's and the last month and the month before that, the highs and lows, the ranges, and what is the price doing? Is it breaking out? Is it ranging sideways within a range? Is it breaking down? Is it breaking down and pulling back into the range? Is it breaking out, failing to stay out and coming back into the range, a previous range? So all of that has been consolidated into this indicator. And what the indicator does very cleverly is then arrive at a context and a bias for the current, for the moment that we're looking at the chart. So it's real time, right? So it's a pretty hefty indicator, and I can't live without it these days. So, and it speeds up my analysis tremendously. So at the start of the day, when I was coming into my trading window at 10 a.m., okay, we're looking at a situation that is bullish. So the weekly chart's bullish, the daily chart's bullish, the sessions are bullish. And with that in mind, what I then need to do is decide, well, how am I going to get in on this bullish bias on my day during my trading window? What do I need to see? What rules am I going to apply? What rules are there within my system? So I have a rule-based mechanical system for trading. So I lean against the trend predator indicator, but this does 90% of the work. Well, I'd say 50% of the work. It does the multi-time frame analysis. The rest is my behavior as a trader. managing myself on a day-to-day basis to be able to come to the screens with a clear, crisp mindset that's not bogged down with personal situations or whatever it might be. So I've got a good psychology to be able to come into this market and perform at my optimal level. And then the rest of 25%, therefore, is then left for having a system to trade the market whereby I will manage my risk according to my system, my targets, my entry, and how I then manage the trade when I'm actually in the market. Do I set and forget? Do I micromanage it? Depending on the circumstances on the day. So at this point, I'm now looking at how is the day set up, and I have various schematics that I will trade. So I trade setups. I'm not just trying to catch a mood. It's got to be A plus B equals C. So in this respect, then, the Trend Predator Pro's done everything for me in terms of arriving at a bullish bias. And just to break that down, the bullish bias has arrived because we are above the lows from Tuesday. So we've broken down and pulled back up. So we've been working the low and we've pulled up. So we've trapped traders short, and now we're moving against all of these short traders. It's a short squeeze setup above Tuesday's lows, and then getting above London's highs was bullish. So we accomplished that. And then we formed an opening range. This is part of my system. And I want to see the price close outside of the range, which it did on a 15-minute basis. So at 10 a.m., we're in. Okay. Now, there's other criteria here, which I'll just very quickly go over. I want to see that the market has moved against where I'm going prior to getting in. So it's done that. And it's given me a fake out low entry. So I get in. Okay. And that's it. All right. So I've got a bullish context as per the Trend Predator Pro, and my rules have been met to engage with that bullish context, and off she goes. Okay. And then we've just got this sideways market. So at this point, it's down to me, my behavior as a trader. What am I doing? Am I going to trade my system? Am I going to be worried about these pullbacks and get out of the trade? No, I'm going to set and forget and leave it. I've got my thesis. That's my rules have been met. That's it. That's my job done, and I get on with the rest of my day doing other tasks elsewhere or whatever it might be, take the dogs for a walk, etc. So now we're coming into FOMC minutes. I personally don't treat the FOMC minutes as a major risk, so I'm quite happy just holding on to this position at break even into the minutes, or even not at break even. So just let it ride. So that's essentially it. It's a 3-2-1 target. What am I targeting? I'm essentially targeting the breakdown from Tuesday. Okay, we've got this scenario where we've dumped. I might be bearish overall in anticipating a sell-off later on in the week or next week into the lows of last month for reasons which I explained earlier. I won't go into that now. But that's essentially how I arrived at that trade setup. I was very vocal about it in the Discord earlier on. If you want to go back and review that analysis as well, and how we got into this trade and are now approaching the target. The target is a 100% range expansion that meets the breakdown of London. So yesterday's London level, there's the breakdown, assuming that we're coming up for a squeeze on those shorts that are stubborn and don't want to let go of that trade, and we're coming up to get their money. It's a zero-sum game, and that's what we're targeting because of that. And then we've got 100% range expansion that has a confluence with that breakdown level. So that's the target, which may or may not transpire. I don't have to be right 100% of the time, just occasionally, because I have an asymmetrical reward to risk, a positive asymmetrical reward to risk on all of my trades that allows me to be break even at times, losing at times, and winning at times for it all to come out into the wash as a profitable system. So that's gold, and then we'll jump to the US 30. Now I'm kicking myself with the US 30 because there was a beautiful trade setup which I wasn't able to grab. Now I have to say I get very busy with various tasks, and trying to spin so many plates is still something I've been unable to manage effectively in order to um, capitalize on all of the analysis that I do and trading opportunities that come about. But nevertheless, bear with me. What's happening here? There we go. So as I said, 10 a.m. is my trading window from 10 a.m. onwards. What I was actually looking for was a rally. Well, in fact, I mean, I'm always looking at two scenarios, but my preference was for a rally. A rally would have taken us into a 3-star opportunity in what looks like what I call a sort of a TIE fighter schematic on the day. So we've got this dump, we've got this negative coil, so dump and pump. Now, bear in mind, this is on the day, bear in mind that the inside day had already been taken advantage of by the London traders. So it took out the low of the inside day and pumped to the other side. That is a signal day, a setup, a standalone setup. We can't take part of that in New York, so we're picking up the crumbs when we come into New York. The question that I put out was whether or not this is overextended. Can we realistically see any more upside? I came to the thesis that yes, why not? And I was wrong on that thesis. So I was going to be targeting a continuation once the market had faked out to the upside, faked out to the downside, and then gave us a continuation prospect. But that didn't come about. I was too engaged in that thesis to have been able to take advantage of the other scenario that's the high of the day, something that we talked about at the start of the day. Has this already gone? Is there any fuel left in this market? Potentially not. And therefore, that would have been the trade to the downside. Now, what I was looking for at this time, I applied a VWAP to my analysis, and I was looking for the price to get above the opening Wall Street open VWAP for confirmation of a long to add to the position, but I was leaning against prospects of the London VWAP, which will be 3 a.m. FTSE Open, acting as support. Also, what I was looking for was the London highs and the Wall Street low, the Wall Street opening low, 9:30 a.m. There's our box inside of the opening range box, 9 a.m. to 10 a.m. Wall Street of New York. What I was anticipating was a pump, trapping traders long, then the dump, stopping them out, and then a fake out low to come back up in line with the overall bullish thesis. Okay, the context of the market, which is indeed bullish. So long as we stay above yesterday's inside day highs. Now, coming back below those invalidates the bullish setup to some extent. So we'll just play forward. But I was stubborn in the belief that the price was going to retest the London VWAP, come back inside of the Wall Street range, the lows, back above the London high, and give us a beautiful 3-star bullish setup, which would have been a colossal R, depending on where you put your stop loss, and could have been the trade of the week. Okay, so I wasn't wrong to get ready for that setup, but what I needed to be was far more flexible in my thesis and allow for, and almost at the very same time, have a setup ready to take advantage of a 1-star quality setup to the downside. Okay, and we'll play this forward. So here I'm rolling up my sleeves at 10:30 in anticipation of a rally. But what we didn't get was the rally. Instead, we got what the rally, meaning I wanted the price to give. What we've got here essentially flipped on its head over here to go long. So we've got a fake out high over here, which was the short entry. But what I was looking for, and I was too stubborn in anticipation of it, I think I was even looking at a 1-minute chart at that point, was a fake out low, as I've already explained a few times now, of the Wall Street lows. So a dump and pump back inside to move up. That's what I was preparing myself for. And then this here, I let it go. I wanted to see if this was going to be a fake out low and a pump up. But that was foolish because we'd already had the breakdown of this symmetrical triangle consolidation. All this in here is can go either way, but when you get that engulfing candle breaking down, it's not engulfing, but that strong breakdown candle, what does it look like on a 15-minute chart? All of that looking pretty bearish, isn't it? So unfortunately, when I'm zoomed in on a 3 or 5-minute chart, I'm missing the bigger picture. I'm not focused on that any longer. I'm looking at the smaller term time frame, and that is analysis paralysis essentially, and you're just blinkered. This here, so I let it go. I thought, okay, well, that's a setup. I let it go, and I wanted to get in, but I needed, as part of my rules, rightly or wrongly, so I left it because I stuck to my rules. At this point, you're below the VWAP of Wall Street. You're also finding that the London VWAP is not acting as support. It's broken through. Fantastic. Okay, great. So I'm aligned for a short now. 1-star setup, but it never gave me the pump that I required as part of my rules to take advantage of what was a very nice move to the downside, hitting the target, which was the closing price, which would have been a nice 4-to-1 opportunity. So that's the wrap of the day. You've got to pat yourself on the back for sticking to your rules, being able to identify these setups, whether you get involved or not. Every day is a school day, and I need to get more stuff off my desk and roll up my sleeves and concentrate on these setups, rather than trying to spin too many plates and do too many things at the same time. But anyway, so that's something personal. But I hope that would be educational for anyone that has got this far into this video and that's serious about learning this strategy and my approach to day trading. And I wish you good luck in your endeavors, and we'll do it all again tomorrow.